Hey, what is up? Welcome to this episode of the Entrepreneur to Entrepreneur podcast. As always, I'm your host, Brian Lofrumento, and very importantly, we are absolutely going to talk about money today. And I'm so excited about the guests that we've brought on and invited on the show to do that, because this is someone that everything I saw about her work, everything I saw about her messaging, her attitude, her mindset towards money, it's all about having money fuel your growth, which at certain points of our entrepreneurial journeys, sometimes it might feel like it holds us back. So let me introduce you to today's guest. Her name is Kelly Goode. Kelly is a fractional CFO, a financial wellness consultant, and the owner of the Goode Path Group. With 20 years in accounting and finance experience, she's on a mission to help business owners feel confident when making decisions and ready to take action that supports their goals. Kelly's known for her calm, straightforward, talking approach and the ability to break down the numbers in a way that actually makes sense. Why? So that her clients can stop second guessing and start building a profitable, sustainable business with real peace of mind. I think every single sentence of her bio is what we all want to achieve, so I'm not going to say anything else. Let's dive straight into my interview with Kelly Goode. All right, Kelly, I am so very excited that you're here with us today. First things first, welcome to the show.
Thank you so much for having me. I'm very happy to be here because I can talk about money, accounting, bookkeeping, tax, all those things all day long.
Yes. Kelly, honestly, the hardest part about being a podcast host is I wish we could do a 24-hour episode. It's going to be so hard to squeeze your genius into 30 minutes, but let's start with you. Take us beyond the bio. Who's Kelly? How did you get into all these very important things we're going to talk about?
So it took me 10 years to get a 4-year bachelor's degree because I never knew what I wanted to do. I was interested in learning. I loved college, and it just took a long time to finally nail down the right class. And it was my Accounting 101 class that it clicked. A lot of people have trouble with the debit credit side of things in the background of the accounting world. It just made sense. And once I got started, I knew that's what I wanted to do. And along the way, I have had experience in a variety of industries, whether it was public accounting, private owned businesses, and just different industries. But it's always, the numbers are the same. It's just how you apply them and what you do with them. So it just, along the way, I finally realized I really want to do this for myself in a way that I know that I can help business owners actually understand, because I think one of the messages we hear, especially in TV, got to have everything, got to have all those receipts for my taxes. I mean, and taxes are one piece, and they are a big piece, but it's not the end all be all, and it's not the final. So understanding how to use your numbers of your own business to help you is critical. And that's often lost in translation while everybody's busy running, busy working, busy operating, and doing all the things. So that is where over the last really 18 months, I've really tried to focus, narrow down my specialty, and help business owners actually take control, because I can fall victim to it myself. Is you're busy working, you're helping your own clients, your customers, and you've lost sight of why did you actually start your company in the first place? Why are you in business? What are you here to do? And while serving our clients and helping others often is a big, huge part of that, it's also, most of us, I would say, probably got into this for financial freedom and flexibility in our lives. And being able to figure that out, sometimes you need help, and sometimes you need to go to the experts. And that's where I come in for business owners, that they're busy, they've got plans, but they don't quite know how to make personal, professional, financial, all of those goals line up. And there's a way to do it, but you need a plan, you need a path, and the dreaded word, budget, forecast, all of those things, you've got to have them, because you can't plan to get somewhere if you don't actually have a path to get somewhere.
Yeah, so well said, Kelly. That gives us so many launch pads that I'm excited to go in a lot of different directions in our conversation today. But I really want to start with the fact that you called it out. You love talking about this stuff, which as an entrepreneur for 18 years now, I've seen so many different entrepreneurs that, Kelly, don't want to talk money. And in fact, I would argue it's kind of society's influence. I think that we're always taught ever since childhood, don't talk about money, don't do all of those things. Why is that? You obviously bring out those money conversations. What have you noticed around that societal mindset when it comes to these conversations and this topic?
So like you said, it is often we've kind of been trained to this. You keep things quiet. You see it in corporations. You're not allowed to discuss salary. You don't ever ask what somebody else is making. And there's a whole other set of issues and factors there. But when it comes to business owners, it often comes back to guilt and shame about where they're at, where they're not at, what they wish they were doing, but they don't know how. And it's usually a lack of education, a lack of training, or just a lack of general direction that you don't get. Anybody can start a business, and that's wonderful, but you often don't get that handhold along the way to say, don't forget to look at these 5 things as you do it. And so it's usually the guilt that they've either spent more money, or they're in debt, or I haven't reached a specific dollar threshold, or I feel like I should be somewhere else and I'm not. So that's really the big part of it. So that is why I've tried to be more of a mindset and wellness and financial wellness, because it impacts literally everything about our lives. Everything we do, every decision we make, whether it's conscious or not, it impacts everything. And so being able to feel confident in having actual information, even if you're not happy with it, you can at least come back with, I have the information, I have the knowledge now I know what to do. But it's getting past that first step of the guilt part about, I'm not doing what I'm supposed to be. And so it's that avoidance. It's, I don't want to talk about it. I'm not happy with this. I wish it was different. And kind of helping people along the way get over that and actually go get help. So it's almost like if you're going to a doctor, you got to lay it out all on the table and say, here's my issues, here's what I need help with. And that's hopefully where I can bring people along and get them to where they want to be.
Yeah, and I found that a very constant deflection that I experience with a lot of entrepreneurs, because I interview entrepreneurs for a living. I enjoy asking fellow business owners questions. And Kelly, all too often I see people deflect and really diminish the impact of this in their lives and in their businesses by just saying, oh yeah, I know my numbers. And typically when I push a little bit deeper, I know my numbers means they know how much revenue is coming in. They don't know much else beyond that. And maybe they know their bank account balance because they log in and they look at that. What do you mean when you talk about knowing your numbers?
So knowing your numbers is actually understanding the ins and the outs, meaning what's coming in, what's going out. Do you actually have control of that? Or is it automated? Is it just happening? I mean, personally, I don't know how many times I've signed up for a subscription for software to test it. Next thing I know, 3 months in, I've never used it and I forgot to cancel the subscription from the trial period. So it's those little things all the way up to the top with the big things of, if you have revenue, do you understand what's taking place with your revenue? So meaning, do you have consistent recurring revenue with recurring clients, or is it, retail is different. So retail would be, do you understand what products are selling, or how many types of services do you have? And is actually, you offer 17, but 3 are the ones that bring in the clients and the revenue because that's what people want. And you've spread yourself thin to be able to offer all of this whole, package from A to Z. And then also what's going out. Again, keeping an eye on expenses. It's kind of where everybody goes. They think, oh, I got to cut expenses. I have to cut expenses. You know what? Cash management is critical and expense management is incredibly important. So again, getting a control handle, however you want to think about it, on top of, the regular stuff, utilities, software, labor, all of those things. But it's also timing. It's also, do you actually know how many invoices you had go out last month, and can you repeat that next month? Because that's actually the key is your success, is your great months, are those repeatable? Can you make that happen again? Or was it a fluke? You don't know why it happened, but you're just happy it did. And that's actually what I see a lot of is clients that they've had their business maybe 15, 20 years, and there's things that you see within the cash flow in and out that you're like, oh, that is not actually going to give you the answers because you don't actually know what's coming in and out. You see a balance change and that's all you're looking at. That doesn't actually give you the data behind why it's changing.
Yeah, and when I hear you say that, I'm going to go back to my early 20s in particular, Kelly, because that was very much a time. I started my first business when I was 19, so I didn't have the foundation of any of this stuff. Yeah. I didn't have it as an adult per se, because I was in college at that time, and I especially didn't have it as an entrepreneur, which meant that my mindset at that time was very simple, and that was, why would I care about any of this stuff when revenue solves everything? And that was the one marker that my eyes were on, and I told myself, if I can just make more revenue, it's going to solve everything else. Of course, the more that I worked to scale up my revenue, the more my expenses followed. I had to hire people. I had to pay for tools. There was just so much more involved in that. What's your take on business owners, just especially me knowing our audience as well as I do, who are hyper focused on that revenue number, who will say, I'm going to amass expenses in the short or potentially long term for the sake of growth fuel, for the sake of chasing after that revenue? How difficult is it to navigate that conversation, and how should we be thinking about it?
It is a difficult conversation because revenue is the easiest metric to look at, and that's the top line that everybody goes to. And you see a lot of it when you look at social media and marketing and the ads themselves and the marketers and, industry experts. Here's the revenue. I brought home this revenue. Well, that's what they actually usually say is, oh, we made this much in revenue. So a lot of times we are setting ourselves up to try and aim for those exact same revenue roles and like those metrics milestones. And the problem is they're missing the connection between the expenses in the background and the planning and the growth that goes with that, which is, okay, if you made $1 million, it is unlikely that you worked alone to make that $1 million. So you probably have a team, and how much did you pay that team? And are you paying that team consistently, regularly? Are you, is it outsourced where you have contract people doing piecework here? So are you constantly cycling through labor? And then, what all other costs are last minute that you are just scrambling to make, hire out to then make that $1 million threshold? And I think that's really the thing that I see is, it's a threshold that people set, and usually it's not because they either want to spend that time or want to actually get that because it's going to provide something. There's often no true thought behind it. It just seems like this goal that I'm like, oh, I should be doing the same thing as this other person. So this is what I should be doing. This is where I should be, rather than taking that step and saying, well, if I want that revenue and I want that level, what is the planning to get there? And how do I actually get there in a way that I'm not burning myself out, I'm not burning my team out, and actually hit a bottom line, meaning I can take the cash out and that cash is actually available? Because you'll hear it all the time. Oh, we made $1 million last year. You made it, but you didn't actually get to take that home as pay. That's the huge disconnect. And I think it's just setting yourself up for disappointment when you set these unattainable or just arbitrary metrics that I have to hit this number because it feels really good, because you're like, I bet I can reach that. And a lot of times these business owners, they're fantastic at what they do. So it probably is attainable, but it's the planning that goes with that, of the labor, the teams, the software, the costs, the development to get there. And then also how burnt out did it take for you to get there? Or how burnt out are you after trying to get to that $1 million mark? If that's your first mark, do you even enjoy what you're doing anymore? I think that's also the other part, is we set these goals and then become miserable trying to achieve them. And then we've basically feel like we let ourselves down when it was just not necessarily the right goal with the right plan to get there.
Yeah, Kelly, it's so cool hearing your insights, and I'm really excited to ask you this next question. I've never asked someone in your shoes this, but just knowing how many businesses you see behind the scenes of, and you've probably seen some of the best financial management habits, and you've probably seen some truly horrific ones, and I would imagine that you're going to shed some insight on both those, because there's lessons from each. But I'll share this while we're together on the air, because I'm very excited to get your viewpoint on it. One of the hardest to learn in also most impactful financial management things that I've learned as an entrepreneur is that difference between revenue and take-home pay. And it's hard for us, especially first-time entrepreneurs, because you have this money coming in. Like, that's so exciting. I remember I sold a website project back in 2012. I think it was like $20,000. And Kelly, I've never gotten a $20,000 check in one lump sum. And that was really cool because I got to decide what to do with it. So what did my 22-year-old, I was 22 at the time, what did my fellow 22-year-old co-founder and I decide to do? We paid ourselves $10,000 each, and that's exactly what we did. And obviously, the more I've matured as an entrepreneur, I realize, okay, it makes sense to intentionally and strategically decide, what do I do with revenue? How do I decide how much to pay myself? I know what I do, Kelly, but I'm so excited to hear from your perspective. What are some of the different ways for us to make those decisions, and what are the ways that you've seen that work really well while also fueling our growth?
So the first place is I will, till the day of my last breath, have a budget. Because if you don't have a budget and you don't have a forward-looking plan, you're winging it. And I know several industries, ranging from an individual artist, up to, huge corporations that I've worked in. And the ones that succeed and continue, they have a plan. So it is, especially for the small businesses. So my focus now, while I had a career in corporate world that, lots of money, big industries, I now focus on the small business owners, often local, doesn't have to be, but I love working with the local business owners because these are people that I want to support. And so what I see with the successful, I guess financially successful in continuance, is they have a plan. They know that they want to take X amount in a salary or a draw, depending on, legal structure. But they know that they want to be able to take a certain amount of money every month. And then they know how much revenue they average and then what their costs are. So it comes back to starting with a plan. So if somebody out the gate says, I'm going to be a consultant and I'm going to pay myself $20,000 a month, but they don't have a plan on how to do that, it's like, you're winging it. So you can aim for that. But again, for me, it always goes back to a plan. Do you have a budget and a plan of how to make that happen? Because if you don't have a budget or a plan, to me, they're interchangeable, because that's what they are. All it is a plan, which is a live plan that everybody should have, everybody should use, personal, business, no matter what. But have a plan and evaluate, if you are starting out, what's reasonable. And reasonable is going to be different for every single person in every single industry. But you have to look at, what costs do you have that enable you to do your work, provide services to your clients and your customers, provide your products. That's the only way. That's how you start is, well, what is it going to cost me to actually provide this item, product, service, and then go from there and say, okay, well, if I charge X and I know that I'm going to have 5 clients and they're each going to pay me the same amount, what do I have to actually pay in the background? Like you said, you got a lump check. And so a lot of times, anybody that's starting out, they're going to get a check or a payment. But what else comes? Do you have to hire a team to actually do that work? Are you doing all the work yourself? So when you think about how to set your pay, there's all kinds of guidance. So first of all, be very careful on where you get your information. It's like you've got to vet that too. What is considered reasonable salaries for any industry, that's also, to me, is very subjective. Obviously, usually the answer is we want to make as much as we can and bring home as much as we can. But again, it comes back to starting with a plan. You want to make X amount of money because you want to bring home X amount of money. So to me, it's almost like working backwards. If I want to bring home a certain amount, well, how much revenue is that? Because I know I have specific costs. I've got, a bookkeeper. I've got software costs. I've got travel. I've got subscriptions. I mean, you work backwards is the best way that I can put it, is you start saying, I want to bring this home, or I have plans for this amount of money that I'm going to take out. And after that, it's bridging that gap of getting from what's my take home to what do I have to earn. But till my last breath, seriously, till my last breath, it is have a plan. Put a plan on pen, paper, Google Sheet, Excel, whatever is your preferred method, but you've got to write it out and put it out so that you can actually see, is it feasible? Does it make sense? And is it sustainable?
Yeah, Kelly, I love how much you're emphasizing that having a plan. This is going to be the thing that hammers it home for listeners. Yeah. I'm not going to let you use that for your final piece of advice when we get there in a few minutes. But before we do get there, hearing you talk about this, it's something that popped up so much the more I was researching your work and your business, is you're thinking like a CEO, and you very much encourage your clients and all business owners to think like CEOs. It took me a long time, Kelly, again, going back to the fact that I was so young and naive when I started my first business. I didn't know what the difference was. I didn't understand what is the CEO role versus I just built something that I get paid to do what I like to do, but it's essentially, a freelancer, or essentially I built myself a job. What's the difference? It's so clear to me how intentionally you think about this stuff. So I'd love for you to talk to listeners about that CEO role that they need to step into.
Yeah, absolutely. So, and I think we all get caught up in it, and I find myself doing the same thing. And I give myself the same advice. Doesn't mean I always take it, but it's the same advice I would give myself that I will always tell my clients. Where do you want to spend your time? And if you enjoy working inside of your business, constantly doing the thing, whatever it is, maybe that is your specialty. Maybe you're amazing at it and you are the best. That is one role. You cannot forget that you are a business and not just an employee. So if you are self-employed, if you own your own company, you have to act as the CEO. You have to act as the director. And I think that is a hard role to get into if it's not natural, if it's new. I definitely will say when I started, at the end of 2023 is really when I left the corporate world to start this on my own. It was hard because I do enjoy the work that I do. So doing the accounting, the bookkeeping, the financial analysis, I love it. And then it became very clear that that is only one piece of it. So you have to figure out that line between working in your business and working on your business. And that's the terms and the phrasing I hear a lot. And it's really, really, really easy to fall into the trap of just working in the business. So I would say it's dedicating weekly time, if not daily, even if it's 15 minutes, which again, give myself the same advice, doesn't mean I always do it, but taking a scheduled time to actually look at your business operations from that high level bird's eye view of what's taking place, where am I spending my time? Do I have a team? Where are they spending their time? And if you are always constantly working in the business, doing all the things, it might be time to evaluate who can you hire some of that work out to. That's the key. One of the first things I did was hire for marketing and social media because that's not my area of expertise. And while I could have figured it out, I could have stumbled my way through it. It just was not where I wanted to spend my time. And so that was immediately it made sense to me to hire out for that. So I have a wonderful CMO and I hand everything off to her. We meet twice a month and I say, here's what I'm thinking. What are you thinking? Happy to listen to suggestions. And quite honestly, I couldn't do it without her because that is just not somewhere I want to spend my time. And to me, that is the key of saying, do you want to spend your time on it? Are you good at it? Do you need it? How quickly do you need it? And if it's not something you actually want to be doing, then you should hire a professional for that because they're going to be the ones that can give you the best guidance, the best direction. And then you can actually say, okay, now that makes me feel like I am the CEO of my company. I'm the one directing. I am overseeing rather than doing every every step in your company, whether it's bookkeeping, client services, email lead follow-up, all of those things. If you enjoy it, that's great to be working in it, but don't forget your actual business is a business to run, and don't forget to work on it and grow in from that direction rather than just constantly churning out work.
Yeah, Kelly, I love the fact that you can use yourself as a shining example here, because as someone who interviews entrepreneurs for a living, what I see and hear from the way you talk about your own business is it's such a healthy mindset. And that's why I particularly love the term financial wellness for what you do, because you do treat it that way, as if you and I would treat a wellness plan with our health and our fitness. And I really appreciate the way that you view that. It makes me want to ask you the too soon question, because you're so clear on the fact that you hired these things out. And it's a shining example for me. I'm going to continue to use you as that example, because a lot of people hesitate for those hires early on because they don't have a plan. They don't have a budget. Clearly you did, which enabled you to hire. Some people ask that question. Most people ask that question is, when is it, or is it too soon to hire somebody? And then I'm going to just load this on, because I know you can navigate it. When is too soon to start thinking about these things? Because you and I have both already talked about winging it as entrepreneurs. And when we first start our businesses, we don't know what our revenue is going to be. It's going to be extraordinarily lumpy right out of the gates as we figure things out. So let's talk about that too soonness, because I love that Chinese parable of the best time to plant a tree was 20 years ago. The second best time is right now. Is that true with financial wellness?
1,000%, because, the hiring is a good example, not just, my CMO, but any type of hiring, if you are already considering it, it goes back to, you should have considered it 2 months ago, 2 years ago, whatever it may be, because you are obviously now at the point that you're going to think about handing things off. So yeah, too soon. It's never too soon. Honestly, it's never too soon, because again, we don't get into business just to stagnate and sit and not grow. Our whole point, I would venture, almost every entrepreneur, we're here to grow. We're here to do things. We have a big impact. And the only way we do that is if we have help along the way. We can't do it alone. And so having those thoughts and those ideas early, address them. Maybe you can't afford it right away. Understandable. Hiring a CMO was not exactly in my budget immediately. I mean, I went from a W-2 employee to the next thing I know, I'm like, oh, I have to do all this on my own. Do I have the money? And I just decided it doesn't matter. I'm going to have to either, put it on a credit card, which is a personal decision. That's, again, not a flat for everybody. I knew that no matter what, I needed her, and I needed her assistance, her guidance, her expertise to get me up and running with a website, with social media, because I knew that was going to help me along the way, gather new clients, get my name out in the world. I've always been an employee. I've never worked for myself. So I didn't even have a client base. So it is never too early, never too soon to start thinking about it. Because also it goes to setting up systems. And again, that plan, always a plan. If you want to grow and if you want to hire, you still have to have a plan. So again, I'll use myself as an example. For bookkeeping, I want to be able to hand off all of the day-to-day transactional work. I can't do that unless I have a system in place that allows me to train and gives my employees, here's what to do. So I've had some contract bookkeepers over the year and a half. I've been in my own business, but what I would love to do and what I'm working on is I'm building out a system inside of Asana, whatever task management or whatever system, whatever processes make sense for you, but I am building it out because I need to be able to hand it off. In order to hand it off, I have to have it outlined on paper, because I can't just transfer my brain over to somebody else and say, oh, do those extra 5 things because I know to do them. So it's never, ever too soon. I have it, start thinking about it now, start planning, figuring it out, any of those, any of those things you want to do, you got to plan for. And a lot of times those plans actually take preparation of work. So if you're asking, when can I hire? When should I hire? It probably means you probably already should have hired. So get ready and figure out what it would take to make that happen.
Yeah, Kelly, I don't think I've ever heard someone express that concept in such a fun way, because even when you acknowledge I couldn't afford a CMO, or maybe I can't afford a CMO currently. Cool. Plan for it. What's going to make it happen? It's so much fun. I think that's one of the things that drives all of us as entrepreneurs. I'd argue most of us are pretty freaking competitive, and all of us are achievement oriented. We like achieving things, setting those targets, chasing after them, and making them happen. So that attitude is so refreshing for everyone to hear. Kelly, somehow the time has already come. This is one of those episodes that absolutely flew by. I have no idea how you're going to top all the advice you've already laid on us today, but what is that number one best piece of advice that you want to leave for listeners today, knowing that they're both entrepreneurs and also knowing that you are one of us as a fellow entrepreneur? What's that one piece of advice that you want to leave them with today?
Take the first step. Whatever that first step might be for you, whether it's writing out your ideas, asking ChatGPT to outline you something, just take that first step. One of my favorite movies is What About Bob? And Bill Murray, it's the phrase in there, baby steps, Bob. So it's literally every single day is a baby step. Figure out what that first baby step is and just take it. It's scary, it's terrifying, it's rewarding, it's amazing. It's all of the things, but you're not going to know until you actually take that first step. So it literally could just be getting out a notepad and writing out what it is you want to do. It could be actually then hiring the CMO. You could be at that point. It could be hiring a team. Whatever that next step is, it can be a baby step. It doesn't have to be the whole package all at once. And I think that's really where a lot of us might get hung up, is we see the whole picture and we want to get that whole picture done, created, implemented, planned, rocking and rolling. Often life doesn't work that way. So I would say take the next baby step that gets you towards what you want.
Boom. I love that advice. I love the way you paired that advice. I think there's two very powerful pieces that we should echo and that everyone should really hone in on. Is you didn't just say, take that next step, but you also gave us permission and encourage us, even if that next step is a baby step. And I think both parts of that equation are equally important, because I've always loved that Martin Luther King Jr. quote where he said, you can see the whole staircase, but just take the first step. And that is so important. And every single baby step moves us forward. That's how we all learned how to walk. It's an analogy for life and business. So I really appreciate these insights that you brought to us, Kelly. I'm very much excited for listeners to check out all the work that you're doing. I will say, as someone who obviously thoroughly researched you ahead of us getting together today, I love the way your website's laid out. Really what shines to me in every single thing you write and what you put into the world is that healthy mindset. Even in those times where I think finances are tough and we have the inclination to hide from them, it seems like that invites you to, in a fun way, step into them and say, hey, let's back it with a plan. So Kelly, for listeners who want to find you on the internet and all the cool stuff that you're up to, drop those links on us. Where should listeners go from here?
Yeah, Instagram, Facebook, website, everything should be under Good Path Group, goodpathgroup.com. I'm out there, Kelly Goode, Facebook, and Instagram is my business pages where I try and do most of my interactions. I just, like I said, I can talk all day about this because I really love it. And I think that, there's a lot of misinformation or just an overload of information. So be careful about what you consume. And when it comes to financial content, be careful who you go to for advice and services, and make sure the person you're going to for services is actually the right person, because there's a ton of financial professionals out in the world. Not everybody's going to be the right person for you or for your goals. So yeah, Good Path Group. I could talk all day.
Yes, listeners, now you see why it's Kelly of all the people that we were so excited to invite for today's episode. I hope that it was eye-opening for every single one of you, and all those links that Kelly just mentioned, you can find them down below in the show notes, no matter where it is that you're tuning into today's episode. Otherwise, Kelly, on behalf of myself and all the listeners worldwide, thanks so much for coming on the show today.
Thank you so much. A pleasure to be here.